All right, so I bet you're thinking about it. I can practically read your mind.
Oh, is it about the Super Bowl?
Nope, even bigger than that. I'm talking about the Fed hitting that pause button on interest rates.
Oh, yeah, that's definitely making waves, isn't it? Big news.
Huge. And we're going to dive deep into it today, see what's really going on and what it means for, well, your wallet.
Definitely not just a Wall Street thing. This impacts everyone, everyday finances and all that.
Exactly. We've got some seriously smart financial analysis here. We're going to, unpack it all together. So by the end, you'll be making like the smartest money moves ever. So first things first, just a super quick reminder.
Back to basics.
Yeah, what are interest rates again? Like in simple terms.
Okay, so basically it's the price of borrowing money,
Oh,
right?
yeah, it makes sense.
So when the Fed hits pause, it means they're keeping those borrowing costs steady for now. But the real question is why the pause, right?
Yeah, it's not like they just flipped a coin, right?
Definitely not. This was a calculated move. Lots of factors at play.
Okay, so lay it on us. What's the Fed thinking?
Well, first off, inflation. It's cooled down a bit, but it's still, higher than they want. Like their target is about 2%.
Right.
Then there's the job market. It's been surprisingly strong, which is, a good thing. But it also means they might not need to stimulate the economy as much with lower rates.
So it's almost like a good problem.
Yeah, exactly. Strong job market is great, but it makes them, a little hesitant to mess things up.
Right. Don't want to rock the boat too much if things are going okay.
Yeah, exactly.
Yeah.
They don't want to accidentally trigger crazy inflation. Like, imagine if they lowered rates too fast.
Whoops.
Exactly.
And it's not just us, right? The U.S. economy isn't in a bubble.
No, definitely not. The global economy is a huge factor, too. It's like if other countries are slowing down, we can feel the impact here at home.
Yeah, makes sense. So the Fed's got to keep an eye on the whole world, basically.
Pretty much. It's a balancing act.
And we're all like hanging on for the ride.
Mm.
But really, though, what does this mean for regular people? Like, where should we be putting our money?
Yeah, that's the million-dollar question, right?
Literally.
Well, there are actually tons of opportunities here, depending on, how much risk you're comfortable with, what your goals are, that kind of thing.
So, like, different strokes for different folks.
Exactly. Let's start with dividend-paying stocks. Heard of those?
Yeah, vaguely. But give us the quick and dirty explanation.
All right. So basically, these are companies that share their profits with you, the shareholder. Like you get a little check in the mail.
So it's like getting paid just for owning the stock.
Kind of. And with interest rates holding steady, they're looking pretty good because you get that nice, consistent income without having to take on tons of risk. Our analysis pointed out utilities and consumer staples. Those sectors might be good ones to check out for these kinds of stocks.
Because people always need, electricity and groceries no matter what the economy's doing.
Exactly. More stable, less affected by all the ups and downs.
Got it. So even if things go a little haywire, those companies are probably going to keep paying out those sweet dividends. What about bonds? Those are like the safe bet, right?
Yeah, bonds are generally considered lower risk. Essentially, you're loaning money to the government or companies. And when interest rates are stable, certain types of bonds, like treasury bonds, become more attractive because they offer a pretty predictable return.
So less of a gamble.
Yeah, it's all about finding that balance.
Mm.
Risk versus reward. What's right for you?
Okay, so now let's talk about something that I know a lot of our listeners are thinking about. Real estate.
Buying a house, being a landlord, all that.
Exactly. So this pause, does it change anything?
It could. Stable interest rates usually mean mortgage rates are more predictable, which can make people feel more confident about buying a home.
So is now the time to buy? Should we all be rushing out to make offers?
I can't tell you that. Real estate is complicated. There are so many factors involved, not just interest rates. But, I mean, if you've been thinking about it, this pause might be a sign,
Yeah, like a little nudge from the universe. Do your research. Okay, so what about like the really safe stuff? High yield savings accounts, CDs, all that.
The boring stuff. Yeah, well, they might be worth a second look now. With interest rates on hold, you can actually lock in some decent rates, especially with CDs, where you're, committing for a specific time period.
So it's not as exciting as, investing in the next big tech company or whatever.
Definitely not. But for some people, that peace of mind is worth more than chasing the highest returns.
True. Okay, so we've covered the cautious types. What about the risk takers? Growth stocks, tech companies, all that jazz.
Ah, the exciting stuff. Well, stable interest rates can actually be good for tech companies because it means their borrowing costs are more predictable, so they can invest more in innovation and all that.
So if you're feeling bold, this might be the time to, go for it.
But always remember, growth stocks are inherently risky. They can go up, they can go down. It's a wild ride. Do your homework before you jump in.
Don't bet your life savings on a hunch. So we've talked about investors, but this pause impacts everyone else too, right? Small businesses, borrowers, all that.
Absolutely. Stable interest rates could make it easier for small businesses to get loans, less risk for lenders, which means more opportunities for businesses.
So potentially good news for the little guys. What about people who are, looking to buy a house, mortgage rates, all that?
Stable interest rates usually mean stable mortgage rates, which is great news for anyone looking to buy a home. Easier to budget, less uncertainty.
And less stress, which is always a good thing. Now let's talk about something we all probably have, credit card debt.
Well, the good news is the pause probably won't affect your credit card interest rates right away. But it's always a good time to, pay down that debt as fast as you can.
Yeah, no matter what the Fed's doing, being smart about debt is always a win. Okay, so we focused a lot on the positive side of things.
The potential upsides.
Right. But we've got to be real. There are always risks, right? It can't all be sunshine and rainbows.
Of course not. The market is unpredictable. Things change fast.
So what are some things we should be watching out for? Like, what could go wrong?
Well, one thing is, the Fed pausing could actually mean they're worried about the economy slowing down. And if that happens, it could affect stock prices, make it harder for businesses to grow.
So maybe this pause is actually like a warning sign.
It could be. They're trying to walk that fine line, keeping the economy growing, but also keeping inflation under control. And sometimes being cautious is the best approach.
And we can't forget about, everything happening outside the U.S. What happens in other countries matters.
Big time. Trade relations, supply chain issues. If another country has a recession, it can all impact us, even if our interest rates are stable.
We're all connected. So what's the average person supposed to do? How do we make smart choices with all this uncertainty?
Stay informed. Don't just ignore what's happening. Pay attention to the news, read articles like the one we're talking about today, ask questions. You don't have to be a financial expert to make good decisions, but you do need to be informed.
And remember, there are tons of resources out there to help you understand this stuff. Don't be afraid to ask for help. And one of the best pieces of advice I ever got was, don't put all your eggs in one basket.
Diversify.
Exactly.
Stocks, bonds, real estate.
Spread the love. That way, if one part of the market takes a hit, you're not, completely wiped out. So, big picture, the Fed's taking a break, but that doesn't mean we should too.
Definitely not. Now's the time to be proactive, to educate ourselves, make some strategic moves.
Make that money work for you.
Exactly. And remember, the Fed's always watching the economy, so staying up to date on financial news is key. It's like a game of chess. You got to be thinking ahead.
Love that analogy. Okay, so we've talked about the good, the bad, and the unpredictable. From dividend-paying stocks to market volatility, small businesses to home buyers, even your credit card debt, we've covered it all. But most importantly, we've emphasized the power of staying informed and making smart choices. So what's the one big takeaway you want our listeners to walk away with today?
I think the key takeaway is this. This Fed pause isn't a reason to panic. It's a chance to assess, strategize, make informed decisions.
It's about taking control, right?
Exactly. Don't just let the market control you. Learn to ride the waves.
I love that. Okay, so to everyone listening, stay curious, keep learning, and keep diving deep with us here on The Deep Dive.
Until next time, happy investing.
Happy investing and happy living. And don't forget to subscribe and share The Deep Dive with your friends who are also, on a mission to level up their financial game. We're all in this together.
Absolutely. And remember, the Fed is just one piece of the puzzle. There's so much more to think about.
But by staying informed, being proactive, and making smart choices, we can all, achieve our financial goals.
Absolutely.
So until next time, keep on diving.
Dive on. Well, for one, the Fed's decision to pause, it could actually be a sign that they're a little worried about the economy slowing down. If things start to weaken, it could affect stock prices, make it harder for businesses to grow, all that.
So it's almost like they're tapping the brakes just in case,
Exactly. Trying to find that balance, supporting growth, but also keeping inflation under control.
Yeah.
And sometimes, playing it safe is the smartest move.
And we can't forget about, the rest of the world. What happens in other countries, it affects us too.
Absolutely. Think about it. Trade relations, supply chains. If another country goes into a recession, we can feel it here. even if our interest rates are stable.
It's all connected. So what's the average person supposed to do? Like, with all this uncertainty, how can we make smart financial decisions?
First and foremost, stay informed. Don't bury your head in the sand. Pay attention to the news. Read articles like the one we're talking about today. Don't be afraid to ask questions. Knowledge is power, right?
Absolutely. And you don't have to be like a financial genius to make smart choices. There are so many resources out there to help you understand the basics.
Exactly. And don't underestimate the power of diversification. Don't put all your eggs in one basket.
Spread the love.
Right. Stocks, bonds, real estate, mix it up. That way, if one part of the market takes a hit, you're not, like, totally wiped out.
Makes sense. So, to sum it all up, the Fed's hitting pause, but that doesn't mean we should hit pause on our financial planning.
Definitely not. This is a time to be proactive, to educate ourselves, make some smart moves.
It's like a chance to level up our financial game.
Exactly. And remember, the Fed's constantly watching the economy, adjusting its course as needed. So staying up to date on financial news is key to making smart choices. It's like a game of chess. You got to be thinking a few steps ahead.
I love that analogy. So to our listeners out there, keep your eyes on the prize, stay curious, and keep diving deep with us here on The Deep Dive.
Until next time, happy investing.
Happy investing and happy living. And don't forget to subscribe and share The Deep Dive with your friends who are also on a mission to, level up their financial game. We're a community here, all learning together.
And remember, the Fed is just one piece of the puzzle.
Yeah.
There's so much more to your financial life than just what they're doing.
But by staying informed, being proactive, and making smart choices, we can all achieve our financial goals.
Absolutely.
So until next time, keep on diving.
Dive on.
It's really all about taking control, isn't it? Making those smart choices like we've been talking about.
Yeah, for sure. I mean, it can feel overwhelming sometimes, all this financial stuff, but that's why we, try to break it down, make it a little easier to digest.
Bite-sized pieces.
Exactly. It's all about, empowering yourself with knowledge. The more you understand how things work, the less scary it all seems.
Right, right. So like this Fed pause, it's a chance to really, dig in and figure out what it means for you specifically.
Yeah. Think about your own goals, saving for a house, paying off debt, retirement, all that. This pause, it might create opportunities or maybe some challenges. It all depends.
And that's why, doing your own research, asking questions, it's so important. Don't be afraid to talk to a financial advisor if you need to.
Oh, absolutely. It's your money, your future. It's worth taking the time to, really understand what's going on and make those informed choices.
And remember, the Fed, they're just one part of this whole big picture.
Right.
Yeah.
Like there's so much more going on, consumer confidence, what's happening globally, it's impossible to predict everything.
Which I guess makes it kind of exciting too, right? That's always changing.
Keeps us on our toes. And that's why, staying informed, being able to adapt, it's so crucial. Always be learning.
That's what The Deep Dive is all about, helping you make sense of the financial world, one episode at a time.
It's been a great diving deep with you today. Hope you got some good takeaways from our conversation.
We always encourage everyone to, keep exploring, keep learning, keep asking those questions.
And until next time, happy investing.
Happy investing and happy living.